welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. RBI extends a tightening pause, keeps repo rate unchanged at 6.5%. Rate cuts seem distant. Borrowers, however, can hope for EMIs to stay steady. RBI Governor Shaktikanta Das says 50% of withdrawn 2,000 rupee notes back into the system slams speculation that the 500 or 1,000 rupee notes. Sam Altman chats GPT with Prime Minister Modi, discusses global regulation of AI, says amazing to watch India embrace AI. Markets slip as immediate rate cut hopes dip, snapping the 4-day winning streak. Akasa Air co-founder Aditya Ghosh says airfares should be affordable, says there is need for more aircraft to stabilize airfares. IMD declares the onset of southwest monsoon in India but expects rainfall to remain weak for at least a week. The Reserve Bank of India maintains status quo on the key repo rate at which RBI lends money to banks, keeping it at 6.5%. This has come as a slight breather for the home loan subscribers, as the repo rate pause indicates that their EMIs when it comes to home and vehicle loans will not increase. In fact, both lending and deposit rates are likely to remain unchanged. On inflation, the RBI has lowered its forecast marginally to 5.1% for FY24. On growth, however, the RBI has retained its projection at 6.5% for FY24. RBI Governor Shaktikanta Das also spoke about how nearly 50% of the withdrawn 2,000 rupee notes are already back in the system. He also clarified on the concerns on what will happen to the existing 500 rupee notes as well.
The Monetary Policy Committee met on 6th, 7th and 8th June, and based on an assessment of the macroeconomic situation and outlook, the MPC decided unanimously to keep the policy repo rate unchanged at 6.5%. CPI headline inflation is projected at 5.1% for 23-24, with Q1 at 4.6%, Q2 at 5.2%, Q3 at 5.4% and Q4 at 5.2%. The risks are evenly balanced. The GDP, the real GDP growth for 2023-24, that is for the current year, is projected at 6.5%, with Q1 at 8%, Q2 at 6.5%, Q3 at 6%, and Q4 at 5.7%, with risks evenly balanced.
Totally so far, about 1,80,000 crores, 1.8 lakh crores of 2,000 rupee notes have come back. About 85% of the 2,000 rupee notes are coming back as deposits into bank accounts.
Business Today's managing editor Siddharth Zarabi spoke with top economists D.K. Joshi from CRISIL and Ranjani Saha of Care Ratings to decode the policy fine print and to find out what the extended pause on rates means for home loan borrowers. How soon can one expect a rate cycle reversal?
One question which I think is top of mind now, what really has the RBI done today apart from maintaining a status quo? Basically, have they dampened and pushed away any rate cut hopes?
Well, I think I would say so. The main objective, I think, of this policy was to take the pause forward, and I think that's what they did. I think one more addition, nuance that they added to this policy was that they made it very explicit that they are chasing inflation target of 4%, and they want to align the inflation to the target that I think they have been saying they want over the medium run. So that I think makes it very clear that they are not in a hurry to cut rates. There is a risk of them slowing down faster. There is a risk of financial accidents, geopolitical issues. I think all those things they highlighted. And on top of that, I think despite a normal monsoon forecast from the Met, the risk of El Nino has not gone away. And even if the monsoons remain normal, I think their distribution over time, over geographies, cannot be predicted at this juncture. So that risk always remains. So they've highlighted that is a risk to, from an inflation perspective, I think, which they need to monitor very closely. I think apart from that, I think the messages were pretty straightforward on growth and inflation. Growth forecast, they did not change because the growth momentum that we are seeing in the current quarter is quite strong, and I think they have a forecast of 8%, so it is on track. So they kept the growth forecast unchanged.
Rajni, what do you think gives the RBI confidence in the manner in which they have emphasized the 4% target and the point that D.K. Joshi made as far as inflation is concerned? The reason I am asking you this question is the southwest monsoon has arrived in Kerala, but a week late. We saw sort of different weather patterns, at least in North India, during the height of summer in the month of May. Given all of that, plus the global overhang, what really could have gone into RBI's emphasis on the 4% inflation target?
If you look at the average, that inflation number that they've given for FY24, they have very marginally reduced it to 5.1% from 5.2% that they had given earlier. So, and they have highlighted a lot of looming inflationary concerns. Like you highlighted, one concern is weather-related disruptions. We cannot completely, while IMD has given a projection of normal monsoon, we cannot completely ignore the risk of El Nino. So that's something which RBI would be conscious of. Second, like RBI has highlighted, they are concerned about any other global supply constraints which could again push up global commodity prices. So given these uncertainties, RBI has preferred to, while they have maintained status quo on rates, if you look at the stance, there was some expectation in the market that probably they would move the stance to neutral. But they have maintained removal of accommodation as the stance because RBI wants to give the message to the market that they are still very cautious on inflation front, and they would like the market participants also to remain very cautious on market front, on inflation front. And in fact, not just RBI, globally, if you see, the central banks are indicating that they are going to be very flexible and they are going to be very data dependent. So they are not giving very clear forward guidance.
This concerns a lot of our viewers, which is what happens to deposit rates. And it's not directly, I mean, in some ways, the question is not directly linked to the repo rate status quo, but to do with the 2,000 rupee currency withdrawal and the impact on banking liquidity. What's your own sense about deposit growth and whether savers can now expect lower or flat savings rate for their deposits?
Because its policies stance is withdrawal of accommodation, they will not let the excess liquidity accumulate in the system, and they'll try to bring it down to near neutral levels. So I think all this, and I think Governor also had pointed out that it will work both ways. I think if liquidity becomes less, then they will infuse. So they would basically, I think, try to keep the liquidity in line with the requirements of the economy. But at least in the near term, I think that should create some downward pressure on short-term interest rates. But let's see how it plays out. Right now, the yield curve is completely flat. whether you have a 1-year government bond or a 10-year government bond, the rate of return that you are getting on them is exactly the same, which essentially actually is pointing that maybe going ahead you will see rate cuts. I think that's what the yield curve is telling you about. So I think from a consumer's perspective, I think I would say the deposit rates have probably peaked and they would not go beyond this. And going ahead, I think they're likely to stay at these levels for some more time before I think they start softening.
Rajni, would you agree with that, the point made by DK Joshi that deposit rates have peaked?
May go up a little more as the pass-through has not completely happened. But more or less, I would agree that it has peaked. And given that we are not looking at, we are looking at the RBI maintaining status quo, it's likely to remain around these levels, the deposit rate.
Sensex snapping a 4-day winning streak after hints from the RBI policy outcome that the wait for rate cuts may be longer than expected. Benchmark Nifty saw a bout of profit booking at the touching distance of the all-time high and closed the day below 18,650. Sensex slipping close to 300 points, closing at 62,849. All sectors barring metals came under selling pressure. Top laggards today: Grasim, Kotak Mahindra Bank, Sun Pharma, Tata Consumer and Tech Mahindra. Meanwhile, NTPC, JSW Steel, Power Grid, ONGC and L&T saw some gains and pretty decent gains, particularly on those power stocks today. The IMD declaring the onset of southwest monsoon in India as it finally reaches Kerala, although a week later than it normally does. The IMD has said the progress is likely to be slow for at least 1 week due to the severe cyclone developing in the Arabian Sea, which may further delay its penetration over the Indian mainland. India is expected to get normal rainfall during the southwest monsoon season despite the evolving El Nino conditions. Collections under the small savings scheme for senior citizens grew by 4 times in May as compared to last year, as per Finance Ministry officials. The fresh mop-up under this scheme was more than 15,000 crores in addition to the existing one. This is also because of revision of maximum limit and rate of interest. My colleague Karishma Sudani brings us the story. Karishma, tell us, what has been the net collection? How will this impact the government's budget estimate?
Well, yes, the Ministry of Finance is happy about the collection under the Senior Citizen Savings Schemes for the month of May. In fact, my top sources tell me that the net collection has been close to rupees 24,000 crore, which is 4 times the collection in terms of year-on-year basis and about 85% up on a month-on-month basis. It was rupees 6,000 lakh crore that was collected in the month of May 2022 and close to about 13,000 that has been collected in the month of April, that is 13,000 lakh crore. So the total collection has been at 24 lakh crore and the mop-up in terms of new people joining it has also been good, and clearly this is also because of government's revision of the rate of interest from April 1st, 2023 and also increasing, in fact they put a double the limit in terms of investment into the scheme.
The man behind the AI revolution, OpenAI founder and CEO Sam Altman on a 2-day visit in India, meeting the Prime Minister and discussing the global regulation of AI. He said there's a need to put guardrails, but over-regulation may lead to more harm. He also shared tips with students of IIT Delhi on how to AI-proof jobs.
So you met Prime Minister Modi this morning. How was your meeting?
It was great. It was really fun. He was so enthusiastic, really thoughtful about AI, the benefits of it. We asked why India has embraced ChatGPT so much and so early. It's really been fun for us to watch. He had great answers about that. We talked about the opportunities in front for the country, what the country should do. Also the need to think about global regulation to make sure we prevent some of the downsides from happening, but it was a great hour.
If you are in India, and the first question that, when people use ChatGPT, the first question they ask, anybody, right, whether it's a call center person or anybody, would say that, hey, you know what, this is going to take my job away. So while that may be true or not true, that's a different thing, but how do you see it playing in a country like India, which is so much into services sector? So I think.
So I'd say with this, what we're seeing with things like ChatGPT in our models, jobs will change. How people do their work day to day might change, and it will evolve. Something we've seen happen is people might go from like doers of small tasks to actual reviewers, where perhaps the smallest task of something people might use ChatGPT for it. So that's coming. Things will change. I think the way to approach it is probably to take care of it, to kind of keep up with most of the tools, see what's happening, and learn to adapt with it. But it's definitely coming. So like it's something to keep on the horizon and in the mind.
That's right. That's right. So I think if you can, any of you, if you can talk about the positives in the sense, how would the country which is more or less 30 and under 30, and a lot of huge developer ecosystem here. I mean, most of the folks here are developers, in fact. So could you talk about their opportunities from the AI point of view, not just OpenAI, but in general AI point of view?
Yeah, I think this is going to be the most transformative technology humanity has yet invented. And the countries that embrace it, the people that embrace it early, are going to be particularly rewarded. It really is amazing to watch what's happening in India with the embrace of AI, not just OpenAI, other technologies too. And I think we're going to look back 30 years, 50 years, whatever, and say, wow, we lived like barbarians. Life is so much better. When intelligence becomes close to free, and not only that, but when it becomes qualitatively different at what it's capable of, we view our role as we build the tools, we give to all of you, you all amaze us with your creativity and what you can create for the world. So I think that's really going to happen. I think India is already like one of the centers of this, and I'm sure that will continue.
Hi, I'm Akanksha here. Hi, I have a question from the policy side of it. You've been doing great work. Everyone at OpenAI has been doing great work. Thank you so much. We've all used the models. But I have a question when it comes to open source AI projects. How do you think, I mean, I do know that you yourself said multiple times that the door has to be let open for small projects so that they can grow up. But there has to be, regulation in some sense because the growth has been exponential as we're seeing. Do you see how can policymakers and governments sort of rein in regulation, at least when it comes to open source projects?
I agree with all that. I think open source is important. As it gets more powerful, we will need some guardrails on it. But I worry about over-regulating and stopping what is an incredible Cambrian explosion of talent and creativity.
As airfares continue to soar, Akasa Air co-founder and former chief of Indigo, Aditya Ghosh, batting for more affordable airfares. In an exclusive conversation with Business Today's Karishma Sudani, he said there's need for consistent supply of new capacity in Indian aviation, which can in turn stabilize airfares.
What do you think about these high airfares across the domestic sector, and what can be done to reduce them?
Karishma, I think every once in a while when there is suddenly a demand-supply sort of gap, there is this, sometimes it happens that there are these fares that peak. And frankly, I've said this, the same boring thing for now almost 15, 17 years, that airfares consistently should be affordable. Now, there will be always some peaks and troughs depending on how much there is demand, but there should not be any gouging of fares. There should not be any unnecessary abuse of a particular near-term opportunity. How do we bring fares down? I mean, which is what you asked me. I think it's probably a combination of two things. At an overall level, there needs to be consistent supply of new capacity coming in, because India is a highly underpenetrated market. For a country of 1.4 billion people, give or take 500 commercial airplanes is really nothing, And not all those 500 commercial airplanes are flying, and not all of the ones which are flying are in the domestic market. So it's the actual domestic capacity is even less than those 500 airplanes. So just continuously new capacity coming in, new airplanes coming in to meet that demand is the basic fundamental. The second is that, I have a reasonably simplistic view on fares, that, it should be at a level which meets the cost of an airline. and at the same time, it cannot be something which hurts the customer. Now, the way to really do that is even when you're bringing in new capacity, for airlines to be able to focus on their cost structure, because if their cost structure is much lower than in the past, then the fares, even if they meet that cost, does not have to be something which starts becoming a pain point for customers. So I think this is the way I kind of look at airfares.
And here's what else is making news in the corporate world. After Twitter, you can now have your accounts verified on Facebook and Instagram. Facebook parent company Meta has announced its own subscription-based verification system in India called Meta Verified. However, Meta will be honoring the legacy accounts, and unlike Twitter, it will not remove them. And in India, Meta Verified is priced at 699 rupees per month for Android and iOS users. The company has announced it will soon be available on the web for a monthly fee of 599 rupees in India. EdTech unicorn Byju's skipped paying $40 million interest on its $1.2 billion loan that was due on 5th June, triggering a default. The $1.2 billion obligation is the largest unrated loan by a startup ever. The once high-flying company had been trying to strike a deal with creditors to restructure the loan after the decline of the pandemic-era boom in online tutoring dealt a blow to its finances. Amid all this, fresh reports suggest Byju's is expected to let go of more staffers as it embarks on another cost-cutting exercise to streamline operations further. This comes after 1,000 employees were let go of earlier this year. India's largest tech company, TCS, revealed that attrition rates among its women employees have surpassed those among men. This development has raised concerns about the potential impact of the end of work-from-home arrangements. Recognizing the setback to TCS's efforts to promote gender diversity, the company is actively working on reversing this trend. And before we go, the world remembering Diageo boss Ivan Menzies as he passes away at the age of 63.